Hi, welcome to the Market Alert for Wednesday the 2nd of February 2022. So stocks shrug off Bullard, bad data and Triple B bust as dollar drops. Another day, another disappointing macro data point signaling stagflation. What did the market do? It went up. Let's just have a look at that news. ISM manufacturing and job openings coming out more or less where predicted. But it was the comments from Bullard that sent the market all over the place. And then in the afternoon, the DAX was very, very pitiful. It just traded in a small sideways range. But another day to the upside though. Gold-silver ratio having a bit of a wobble overnight and being allowed to move back to the downside. This 80 area, as I mentioned before, is very important. Okay, let's have a look through, see what's going on. We'll start off with the Dow Daily Charts. You can see the market trading up to the 20 and 50 bar average and through 62. These were all marked up yesterday, and the 200 bar moving average, which the market managed to take out. Next upside targets are obviously these two here, as prices continue to move up. Today, actually, I've just jumped the gun slightly, haven't I? Just go back to Forest Factory. Let's just refresh the page. Today we have news, the precursor to the non-farm payrolls, the ADP numbers. They are out today. Watch this number out 130, 185,807 previous. That's a big difference, massive difference. So have a look at this when it gets released at 130, because that's going to set the precedent for the non-farm on Friday. So given they're good numbers, there's your upside targets, and if not, then you're going to have to watch the 200 MA, the 5 bar moving average, and yesterday's low if prices reverse. 30-minute charts, you can see, was very sideways yesterday afternoon, and it was only just before the close in the last hour that the market actually put on a few points there, driving through that resistance that you've seen in the daily chart. Overnight, it's picked up a bit since, you can see, but it's stuck at yesterday's high and is finding a bit of resistance there, but currently trying to stay above the 5 bar moving average there. In the German DAX, we have a similar picture, the market trading through 78% retracement, the 200 MA, and is slightly more stuck at the 50 and the 20 averages there. Needs to take these out, and the 89 if it is to move higher. Also got this resistance to the left as well. This is where the first set of fibs have been drawn from, so if the market goes through the 89 today, then what I will do is remove these and then just go to the next line above, the next area where there was previous selling, down to the low, and you will see that the 89 has been replaced with 78, and 89 is now just above, calculated off this line here. So actually I'll leave those on there because the 78 is more or less in exactly the same place, so it could be some quite considerable resistance at this level. In the 30-minute chart, was an interesting morning. The market shot up and then shot down towards the close, did a nice retracement there, and then moved back up, did another retracement, and then sideways until the Dow, again, that last hour, moved prices to the upside. In the 2-minute yesterday, the market took off like a rocket to begin with. Again, you can see the retracement there at the top. The market then put in a second one before moving down 100 points, and it was a good move to the downside for sure. Very good trade on the downside, and it's a good job because in the afternoon the market was really bizarre. We started off with a reasonable trade in the 2-minute, and then it became really messy. For 20 minutes or so the market didn't know what to do, and that was due to the news being released at 3 p.m. with the jolts news there. So horrible trading in the for about half an hour in the afternoon before the market then found its feet again. Not pleasant when this type of activity happens. However, the good news is, with the new approach that I've been working on for a long time, this in the 5-minute chart, we kicked off yesterday morning, oversold with demand. We can see them buying in, stochastics crossed over, and then we get the turning point at the top, which a market will put in. You get that, we just remove that and redo it. You get the, there you go, you get the 89% there. Parabolic turns red. We've got divergence in the stochastics, and down she goes for 100 points there. And then at the bottom we've got from here to here, retraced back, we've got the close. Again, we've got demand, we've got divergence in the stochastics, the momentum starting to change, and we close above the 5-bar moving average, parabolic green, and then we get the move back to the upside. And then in the afternoon we kick off with the market selling off and then not doing a lot else except trading sideways, but you get that same pullback again before the market moves up. And you can see this pattern all the way through off the overbought and oversold areas. And a quick look at the metals. Like I say, just going back to that 5-minute chart, this will all be released a week tomorrow. Okay, so in the silver markets, it was allowed to move up yesterday. If you look at this in the 30-minute charts, it was a nice move to the upside in the morning. And then, of course, in the afternoon, bankers come in and bash, down we go. Manipulated back down. We're getting too close to the 38% retracement there. And also $24, not $24, $23.50 at this level, and then the market's hammered back down and looking weakish overnight. So again, expect this to be moved lower. They're not done with the downside, as I said before. I'm still holding trades at $20, and I have a funny feeling I will probably pick up those orders as well as we go forward. I've had them for some time, I must admit, but the way they're playing this market, any opportunity to hammer to the downside, it appears to be the case over the last couple of months, which is bizarre because it's the gold-silver ratio, getting silver out of the ground, is 7-1. In the derivatives manipulated markets where there is no fair price or price discovery, it's 80-1. So you can see the manipulation is blatant. But one day when they stop it, it'll be worth all of the grief that we've endured in this market. In the gold market, also looking weakish as well at this time, with the talk of Russia going to war with Ukraine as well. Boris was over there yesterday, I think, well, in Ukraine. Dollar back 62%, there's a crucial area for it to move back to the upside as well. And crude oil heading back to 90. It's been sideways since Friday. There is a bit of a glut, but we have got today, we've got the crude oil inventories, which are still showing a surplus, or forecasting a surplus, 2.4 million surplus last week, which has put a bit of pressure on. The market's held on the highs because of the prospect of war. Okay, that will do it for this one. Let's see what happens during today. Watch those ADP numbers at lunchtime, and as ever, thanks for watching. See you in the next one.